Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the opening action, the trading setup, as well as the market strategies for the day. Remember, we start off this day with a very, very heavy heart. Last night and the entire afternoon and evening were very, very heavy for all the Indians who witnessed this horrific, unfortunate, tragic incident of Air India 171 plane crashing, killing 241 passengers on board. Only one lone survivor who escaped this death trap was Ramesh Vishwakumar, who miraculously escaped this incident by escaping out of the emergency door, jumping out, suffering slight injuries. He's undergoing some treatment at the hospitals as well, but he walked out immediately after jumping before the blast that we saw. And that shook the entire nation with fear. We have been seeing now, at this point in time, as we speak, Prime Minister Narendra Modi is at the crash site in Ahmedabad. What we're also given to understand is both Civil Aviation Minister Ram Mohan Naidu and MOS Muralidhar Mohol are joining Prime Minister Modi to visit the crash site at this point in time. We are also given to understand that the kith and the kin of and the people who have suffered in this crash are already on their way to Ahmedabad. And it was a devastating sight, a very, very difficult day for even journalists to see. There are many visuals and photographs that we get, which we cannot show you on air, dear viewer. But it was a very difficult sight for as a journalist to really see, decipher, and then continue to move on with regular programming. But as they say, the show must go on. We will continue to talk about what else are we supposed to keep in mind today. Friday the 13th, and it started off on a negative note yet again. We are again seeing that we are in the middle of a geopolitical tension in the Middle East. What we are given to understand is that Israel has carried out what it described as the preemptive strikes against Iran, and a state of emergency has also been declared in the country, according to the Defense Minister Israel Katz. Now, what we're also given to understand is that because of this, the Dow futures, US futures have all slipped. Asian markets, they're deep in the red this morning. GIFT Nifty is indicative of a sharp, deep gap down start. 300 point of a gap down is what is being indicated at this point in time. That's something that we will be looking at as well. We are also seeing that, according to the New York Times, an Israeli military official who's spoken to the media on anonymity conditions has said that the strikes in Tehran targeted facilities that were linked to Iran's nuclear program and its long-range missile capabilities. The official also noted that Israel was carrying out dozens of strikes across various locations in Iran. Now, as a result of this, what we've seen is that the crude oil prices have jumped sharply after Israel carried out these airstrikes against targets in Iran, raising fears of fresh confrontations in the region that accounts for a third of global crude production. At this point in time, we are 11.5% higher on the crude oil prices. Brent crude has surged past $77 a barrel as well. WTI NYMEX crude has also spiked by more than 12%. JP Morgan report indicates that oil prices could spike to $120 per barrel or more if Iran closes the Strait of Hormuz in response to the Israeli strike. So all of those developments are going to be keeping us vigilant throughout the course of the day to find out what's happening across the globe. And of course, we will be looking at our own domestic markets as well. As far as the foreign portfolio investors are concerned, they remain net sellers of the Indian equities as on Thursday. Floating stocks worth about 3,831 odd crores, and domestic institutional investors, even though continued to stay net buyers for 20th straight session, bought equities worth about 9,393 odd crore rupees. As of yesterday, we gave up the 6 days of a run up that we had seen in the Nifty. It was the expiry session. Plus, there were more factors that really weighed on the stock market sentiment. Remember, first, there were indications that the US and China have come to a deal as far as the reciprocal tariffs are concerned. But there was no clarity on the contours of the deal. There was no statement from China as well. That led to some kind of a nervousness building up as to whether a deal is done and in which form. And lack of clarity is what also, gave in. We're also looking at, of course, the domestic cues that came in after the market hours yesterday, which was positive, and that is by way of inflation numbers. Retail inflation in India has slipped to a 6-year low of 2.82%, and that's a positive, which means that we could probably be ending the fiscal year much lower than RBI's own estimates as well. We've already had, just before this data point came in, a bazooka rate cut by the RBI. And now we will be looking at understanding as to how things progress. Again, the question mark comes in whether the low inflation can continue given what's happening on the geopolitical front and the spike in the crude oil prices as well. There's so much to talk about. So we will be looking to welcome our guest on board, Mr. Mayuresh Joshi, will be joining in to share with us his views on the markets and overall strategies that we must be following. Marish, morning to you. Good to have you with us as always. Of course, we are continuing to keep an eye out on what's happening on the development on the fatal Ahmedabad-London bound flight yesterday. Our heart goes out to all the families who've suffered, and the 241 lives lost for nothing within fractions of seconds. At one point in time, you just go on to question the entire existence and life and the unpredictability, uncertainty of that. But at the same time, like I started off the show by saying that, the show must go on and we keep on moving, just praying and hoping that things turn back. But again, you sent me this morning what's developing between Israel and Iran. So geopolitical tensions are back in focus.
Morning, Sakshi. No, really unfortunate of what happened yesterday. So, Om Shanti, and may God bless their souls. That's all I can say, and strength to their families. Yes, and I think the overnight development that has happened in terms of the preemptive strikes that Israel has done on Iran, I think this is going to have huge ramifications, because till this point of time, I think the expectation was that it should largely be a constrained or a contained war that you've been probably seeing between Israel, Hamas, Hezbollah, to a certain extent Lebanon as well. Yeah. And therefore, I think with Israel striking Iran, I think this can blow out of proportions, and nobody really knows the extent and the proportionality of how this blowout will be, which other countries will get involved. And therefore, I think there is a risk in terms of how crude prices will move. There is a risk in terms of how the geopolitical tensions, if they escalate in a very significant fashion and manner, what kind of an impact does that have in terms of the overall globe as well. And again, there is a lot of uncertainty. What we've also been reading to reports is there is a series of civil protests that are planned tomorrow in the US as well. There is uncertainty that is happening on the Russia-Ukraine front. And therefore, I think this global political uncertainty, along with obviously the tariff uncertainty on the economic front, I think this is not a good combination. I think it's a deadly cocktail that the globe will probably go through. And therefore, equities will be sensitive to this. We will see a knee-jerk reaction as far as equities are concerned. They will be on tenterhooks on how Iran probably reacts and all the other elements and aspects that are expected to happen. And therefore, I think the next few days, let's watch out how these events actually are.
Absolutely. I'll come back to the Israel-Iran conflict and how that will be seen in our own context, because we are oil importers, and what's happening there is in fact impacting 20% of the global supply of oil as well. So how that will be in focus. So that's something that we are looking at. The US-China trade deal is something that I also wanted to discuss with you. A few days ago, we were hopeful that at least the China deal is coming through just a couple of days ago. Yesterday, because of any lack of any clarity, the stock markets were not very keen on probably continuing their upward run. Looking at the question marks that were being raised, China, of course, stayed out of making any official statements on what kind of a deal has been struck at all. What's the scene what's the sense that you're getting right now from what's happening on the trade talk at this point in time with China, and of course with the other nations? We are less than a month away from the deadline.
So it's very fluid, and that's what I said, right? I think on the geo-economic front, I think it's very, very uncertain even at this point of time of what is actually going to transpire. What are the fine nuances that are absolutely going to come through? whether it comes to US, China, whether it comes to US and the Eurozone, and the other countries as well, including India to a large extent. Are we still looking at some base tariff impositions? Are there some negotiated tariffs that are expected to come through? Irrespective, I think the markets will be, as I said, on tenterhooks in terms of what actually comes through in terms of these tariff negotiations. As a base case scenario, I think the market is penciling in lower GDP growth by a few basis points that the World Bank and the IMF have probably cut, assuming what might go through. But if it gets escalated as an upside risk, I think global GDP might also succumb under some element of pressure. So I think, again, I think it's a very fluid and a transient situation. What happens in the next few weeks is something that will give clarity, at least on the economic front and the transition thereof globally as well.
Absolutely. So you're looking at a sharp cut in the pre-open trade, 24,320 right now, 2.3% lower is what we're given to understand, far deeper than what the GIFT Nifty was also indicating as a gap down start. Let's see how it progresses. We're still about 7 minutes away from the settling of the price as well in the pre-open, and then we'll go about it. Right now, the rupee has opened at 85.6. No, 86.14 against 85.6. So we are also opening weaker, 54 paise weaker against the dollar is what we are given to understand. But at the same time, when we talk about the dollar index, have you been noticing that this time around, Mayuresh, that the dollar index is not probably reacting in the same fashion as the risk-off trend is being visible on, say, a crude or a gold price at this point in time? What's happening there?
I think there is still uncertainty out there as well on that front, because when you talk about global GDP growth, when you're talking about inflation, the rate cut cycle, I think the yields, the 30 years, whether it's the US, whether it's the bonds, or even the Japanese yen, 30 years, obviously I've seen huge amount of volatility. So I think there is still uncertainty in terms of economic data points that are coming through. And this geopolitical uncertainty probably adds more in terms of the volatility as far as the bond yields are concerned. Obviously, I think in terms of allocation, as I said, on both these counts, I think the next few days and weeks are extremely critical. If the geopolitical scene escalates and goes beyond control, you're probably again going to see spike in gold. You're probably going to see some element of volatility creep in back into the bond yields. And I think as a safe haven bet, I think the rush towards the US dollar becomes a very, very imminent sign in highly volatile and uncertain times like these, which might actually mean that from an immediate short-term perspective, maybe the dollar gains strength at some point of time if this escalates. Else, I think if it normalizes for some reason or the other over the next few weeks, the situation is under control. I think you might see flows again normalize back as far as emerging economies, and specifically as far as India is concerned.
Absolutely. Gold, as you talked about, right now we are seeing a 1900 rupees per 10 grams kind of a move on the upside. MCX gold is back above 1 lakh mark as well. So we had been seeing over the last couple of sessions that the gold prices were inching up, and now you've seen this sharp spike coming, a risk-off trend that is clearly visible in trade at this point in time as well. So that's something that we will continue to keep an eye out on as well. But Mayuresh, something that I was marking out, yesterday's bright spot was the inflation figure that came in after the market hours, 2.82%, lower than the expectations of the street as well. What exactly would you foresee now? Because this comes in right after a bazooka rate cut by the RBI. We might be ending much better off than RBI's own estimate as far as FY25 is concerned, and now FY26 that we are looking at too. How would you look at the inflation? And now, again, the question mark because of what you pointed out, the geopolitical tensions, oil prices spiking. How does that, compromise the inflation situation that was so far getting much better?
So as far as food inflation is concerned, Sakshi, I think it's very much under control, and the RBI had put out a statement as far as the inflation dynamics are concerned in terms of their estimates over the next few quarters. So food inflation will definitely remain under control with expectations of better monsoons. I think the basket, which was very volatile between food inflation, sometimes pulses, sometimes cereals, I think even those prices should largely remain under control, which means that food inflation is not a worry. Obviously, I think if crude spikes and if crude spikes significantly, What does India does with its supply chains? Do we again go back in terms of buying cheaper crude from Russia? Do we have alternate arrangements in place in terms of our payments to the Russian suppliers as well? I think that is something to be watched out for. And therefore, I think crude and the spike in crude might have ancillary and multiplier effects as far as the economy is concerned. And how does that go? I think that's anybody's guess as we speak. But I think that is the risk in terms of core inflation. Unless it moves significantly higher, above $85, I think India might not get affected. Till that point of time, I think we are still in a comfortable zone. And for $85 to be breached, I think there has to be some serious global geopolitical repercussions that have to
Yes. Absolutely. Gold prices now up 2%, 1,300,000 rupees per 10 grams as far as MCX gold is seen. A reversal of the trend of the last one entire month or last 2 months that we had been seeing for gold prices, because they had started to stabilize, come down. But there's a sharp spike yet again on MCX gold, back above that 1 lakh rupee per 10 grams mark. For all those who may be now again looking at gold and silver, or maybe dollars for that instance, to again hedge their portfolios, should they jump the gun right now or just watch the situation at this point in life, like you pointed out, Mayuresh?
Sorry, Sakshi, I was just, there was some message that came through. If you can just repeat.
On gold and silver, I just wanted to understand, will it be jumping the gun if one just goes and laps up on gold and silver at this point in time, looking at the developing situation, or should one just wait it out and watch out for how the situation develops?
No, it's a natural reaction. So I think this was bound to happen in terms of what has come through. And again, I think if this escalates, I think you might see a further uptick in gold because I think, as I said, the safe haven becomes gold and dollar.
Absolutely. So that's something that we will also continue to watch out for as to how things progress on that front. Another key aspect that we have been watching for days now is the block deals front as far as the Indian markets are concerned. Again, it's the Bhartiya group on the Jubilant group of companies that we'll see the block deals take shape. I'm sure a few minutes from now we will get all those details now come through. But Jubilant Pharmova, Ingrevia for that matter, Food for that matter as well. These are the stocks that you must watch out for with the block deals that are in the offing. Genus Power, I'm given to understand, I think the block deal is called off. So we'll just keep an eye out on that. Some more details to emerge from that because we were expecting a Genus Power block deal to take place. The stock is indicative of a 4% downtick as far as the pre-open is concerned. We were given to understand that the Singapore Sovereign Wealth Fund (GIC), was probably launching this block deal to offload 3.6% stake in Genus Power. But I think this has been called off. But we'll wait for the confirmations as they come through. There was also a question mark on Genus Power specifically, Mayuresh, because GIC was a player that entered just a year back in the company, and they're just going to be just making a quick sell off or an exit here just a year after. So was this strategic? What exactly was it? Was it a tactical move? It was difficult to fathom as to why was this happening, or is it just opportunistic because we're seeing a whole host of promoter stake deals happening at this point in time? How would you read through what's happening on the block deal front?
So it really depends on deal to deal, right? And a lot of promoters are cashing out, as we see, for either personal reasons or growth reasons in the company. Now, if it is a minuscule amount, I think that's fine. But if it's a significant portion that is coming through for personal reasons, I think one must really understand why is the promoter doing that. And therefore, I think it's a case-to-case scenario on each block deal that is happening.
Absolutely. So one has to just wait it out to see how things are progressing. Coming back to the markets overall, in the recovery of sorts that we saw 6 days consecutively higher above 25,000 mark too. Mayuresh, were you getting more confident of a certain sectors or themes that you were probably building on more positions in before this geopolitical crisis really came in?
Yeah, I think the markets were penciling to a large extent. I think better earnings growth to valuations a tad bit on the higher side. And therefore, it was looking a little bit improbable that the market will just make a linear move on the upside. Obviously, I think the markets needed confirmation, and specifically from Q1 results, which will start coming in the next few weeks, whether we are actually going to see a bottom in terms of, everything's bottoming out and some sort of a base building process happening. And therefore, I think the markets were certainly looking at some element of profit booking, some sector rotation that is happening. But I think this geopolitical news has probably added fuel to fire in terms of some risk off that can probably happen on the Indian equity markets.
Absolutely. So in the pre-open trade, the Sensex is indicative of a downward start, about 1,260 points lower start. The Nifty, of course, could be opening below 24,500, and about 400 points lower in trade is what we're given to understand from the settling of the price that we see in the pre-open trade. We will be looking at a lot of oil and gas related stocks today. Upstream companies that have been on an upward trajectory for the last couple of sessions again will be in focus. ONGC, Oil India, Reliance Industries will be in focus. A lot of exploration companies will be in focus. On the impact side, you can actually see a few stocks on your screens as well. The OMCs, HPCL, BPCL, IOC, they're actually indicative of a sharp downward tick today because of the sharp spike in the crude oil prices and because they lose margins when crude oil prices are higher. Impact could also be seen on aviation companies, Indigo, SpiceJet for that matter. We could also see paint companies like Asian Paints, Berger, all of these companies, because crude is a clear derivative there that they use as a raw material. You could be seeing, a downward tick. So 5% downward momentum for Interglobe Aviation. Paint stocks also indicative of a start on the lower end at this point in time because of these Israel-Iran tensions, crude oil prices spiking. This is the pocket that could be showing us some weakness today. Let's try and find out from you the safe havens within the markets. Are there any, Mayuresh, in this kind of a developing scenario? Where can one continue to safely put in more money?
I think very difficult to pinpoint, but again, I think healthcare as a space generally, I think might act as a safe haven to a large extent because that hardly gets affected. And again, I think domestic stories selectively might continue doing well, which are less dependent in terms of overseas supply chains and where a large part of their pool in terms of the target market is also domestic. So I think to a certain extent, healthcare, which includes pharma stocks, healthcare, which includes hospital stocks, some of the consumer discretionary stroke durable stocks in India, including apparel players, as I've been mentioning, a few of the local fertilizer companies. In my opinion, I think these spaces are relatively well guarded, both in terms of supply chains, which are not dependent on overseas supply chains, and their target market is largely domestic as well. So again, I think a few of the domestic-driven themes in a very uncertain and volatile environment can actually hold out in my opinion.
Okay, absolutely. So that's as far as the markets are concerned. Let me just quickly look at a few stocks. And before the markets take, okay, we have the first tick now, 24,575, 1.2% lower in trade, 305 points of a cut on the Nifty. As we speak at this point in time, let's also pull up the Nifty Bank to see the other heavyweight space as to how it is moving in trade today. A downtick of 300 points on the Nifty, but let's pull up today's move on the Nifty Bank, not the last 6 months move. 1% lower, 600 points of a cut, 55,441 right now on the Nifty Bank. Let's also pull up IT index. Remember, last couple of sessions, we've seen IT probably be a front runner and pulled up the markets higher, but 1.8% lower start, 37,723 right now. On the IT index, let's also pull up the mid and the small cap spaces, the Nifty mid cap 100 and the small cap 100 index to see how the broader markets are shaping up. 1.7% lower, a 1,000 point cut for the Nifty mid cap, and the small caps down by about 340 odd points, 1.7% lower in trade. So it is a weak start across the board that was being expected. 130 advances to 1,644 declines. The market breadth is completely skewed towards the declining side at this point in time. We are seeing an opening, on the Nifty Bank at 55,481 now, a 1% loss. Mid cap, small caps, both 1.6, 1.8% loss. Their Sensex also down by 1.4%. Across the board, there is a weakness that we see on the Nifty. The key losers are M&M, SBI Life, State Bank of India. Also, you're looking at names like Shriram Finance, L&T, as the stocks that are the top five losers on the markets. BSE Oil and Gas, let's look at the index as well. That's the one that we should be tracking because of the fresh concerns as far as the Israel-Iran war is concerned. And you're actually seeing a downtick on that index as well. 3% equity exchanged on Jubilant Pharmova. The stock is down by about 3%. So we are finally seeing the impact of the block deals that are taking place. I think only ONGC on the Nifty is in the green. The rest, all of the stocks, we have 49 stocks deep in the red today. We've already marked out for all our viewers the key stocks that are on the declining side. Oil India is up by about 3.3% as well. ONGC is up by about 2.4%. Those are the only stocks that are up. Rest, all of them, especially the oil marketing companies, HPCL, BPCL, and Indigo also 5% lower in trade. Let's also pull up Asian Paints. Remember, the block deal took through and then we saw a 2% uptick on the stock yesterday. But now we are looking at some weakness coming in because of these fresh concerns on the crude oil prices as well. Jubilant Pharmova, we have some more details coming in. 48.3 lakh shares, that's 3.04% equity worth 527 crore rupees has exchange hands at 1,087 rupees per share. That's as far as Jubilant Pharmova is concerned, a 3% downtick on this one. Let's also now welcome Mr. Kiran Jani, Head of Technical Research at Janam Broking, joining in on the program with us. Kiran, how do you see the opening and any key stocks that you would be looking at right at the open?
Very good morning, everyone. So yesterday we had a very unfortunate event, and after that we can see some commodity prices also rising. So that is the prima facie reason for the corrections which we are looking at current market. If you look at the crude oil prices and gold prices are shooting up, generally whenever it's happened is uncertainty in the market are hovering, and that's the only reason we can see some panic gap down opening. But looking at the daily price chart, we feel that 24,600 to 24,500 are the very good support, and one can go long at current market price. And we can see from morning opening, the indices has recovered very smartly and very sharply. If you look at Bank Nifty also, the Bank Nifty from 55,300, now it is trading above 55,450. Nifty is also from 24,550, 580 to 24,600. So it is at very good level. Definitely one can go long. And at current market price, we would like to recommend large cap stocks from two different sector. One is the auto sector. Tata Motor looks very good. No doubt this Air India case can very negative for the Tata group. But overall Tata Motors chart price is very strong at current market price. It has given a breakout from double bottom pattern. The breakout came somewhere around 700 level only, and now it is again available at 700 level. Stock price is trading above its all important moving averages. So one can go long on Tata Motor at current market price. Keep a strict stop loss below 690, and we can expect 1 or 2 days price target of 750. One more stock which we are liking, that is an ITC. If you look at the ITC price chart, the stock price is available somewhere around 418, 415 level, which is again cluster support for that particular stock. We have seen previously when stock price crossed above 415, it went up to 450 level. Now after the dividend adjustment, stock price again available at 415, which is the earlier breakout level. So now at current market price, definitely we are liking ITC also. So one can go long, keep a strict stop loss below 410, and within 1 week we can expect 440 kind of a level. So on indices also you can go long, and large cap stocks like ITC, Tata Motor, or even auto sector you can go long.
Okay, fair point. We'll definitely keep an eye out on that. The Nifty is back above 24,600. We'll keep an eye there as well. And the stocks that you've marked out for us, Kiran, but definitely across the board there is weakness. Don't forget to keep a sight of India VIX that spiked 12%, by the way, and that's also again reacting to the fear that's again getting induced because of the geopolitical tensions. In the markets, and of course the sentiments across the board. 15.2 levels now on India VIX at this point in time as well. We also must mark out, condolences from us to Mr. Sanjay Kapoor and the family of Sona Comstar, formerly known as Sona BLW Precision. Yesterday, in a very unfortunate incident, again, he suffered heart attack and he passed away. Of course, the stock is actually reacting downwards as well after this unfortunate incident. And we will also just pass on our condolences to the entire team of Sona Comstar and the family members of Sanjay Kapoor there. Let's look at some of the other aspects in the markets too. Mayuresh, I wanted to discuss with you the banking space. Why I wanted to discuss that with you is also because so far in the first half of the calendar year, despite all the volatility, despite all the uncertainty, it's been the Nifty Bank, as was being discussed. I'm sure you also remember how you maintained throughout, right from before even the move came in on the banking story, that this is a consensus safe bet that will lead the recovery in the rally. It has played its part. ICICI Bank, HDFC, we've seen NBFCs pull up, and now slight signs on PSU banks as well. What I want to understand is that do they still have the strength to further take the markets from here on higher, or do you think they've already done and dusted what they had to, and now we will have to see at sectoral rotation take place?
No, as a sector, I think it might continue doing well. And again, I think it's completely immune to what happens in the globe, Sakshi, I think. So that obviously becomes one of the sectors to watch out for. However, I think the moves that are now happened for the sector as a whole, you really need to be very, very selective here. Selective stocks, which are now going to be outliers in terms of earnings performance, are stocks which will do well, whether it's the large private banks, whether it's the mid private banks or the PSU banks. So somewhere I think the sector or the banking stocks might just consolidate to a certain extent. But certain stocks within this sector itself might still continue doing exceedingly well. So we maintain our optimistic bias on the sector itself from a sectoral perspective. But you need to have a stock-specific approach. And again, immune as far as the global events are concerned, the entire BFSI space.
Okay, that's the entire BFSI space and the expectation there. What about the mid and the small cap space, Mayuresh? How are you looking at this aspect? I think in the last about a couple of weeks, this space showed some resilience, tried to outperform even the frontline indices with the kind of moves that we were seeing here. What is your fresh approach? Is it absolutely stock selective, or is it sectoral wide right now?
No, absolutely. I think the sectors that I said is largely broad-based from a top-down approach. But when it comes to mid-caps, I think it's going to be a very bottom-up story in terms of earnings growth, price strength, institutional holding as we see it in canceling. And therefore, I think within these broad sectors that I mentioned, I think our thesis is that the strength probably still continues selectively within the spaces. So large caps, yes, which have leadership traits, but there are certain mid-cap stocks which are having leadership states as well within all the sectors that I probably mentioned. And as consumption comes back strongly in the Indian context, irrespective of what happens across the globe, with urban consumption coming back, with better monsoons, rural consumption expected to remain stable, I think the pockets of strength, as I mentioned, even within consumption as a basket, might actually start reflecting in the second half numbers as far as corporate earnings are concerned. And therefore, selectively, as I said, the sectors that I mentioned, a few large cap stocks which have leadership traits and mid cap stocks which are possessing leadership traits as well might actually do well. So my own sense is that domestic stories will continue doing well irrespective of what happens.
Okay, got that. Kiran, coming to you. You must have just now seen through what's happening in the markets. So what else is coming onto your radar at this point in time? What are you looking at? Are you looking at some improvement from the opening low that we are seeing as an encouraging sign at all?
Yes, definitely, as we mentioned in opening commentary also, that 24,500 to 600 is a very good support we can see on put side also. If you look at the 26 June monthly expiry, the maximum open interest is somewhere around 24,500 only. So there are very rare chances that market can break below 24,500. Definitely, as you mentioned, that there is an unfortunate event happened, and because and also there is a commodity prices is rising. So there is a knee jerk which is supposed to happen. There is one major tailwind we can see why we are expecting prices to go up. That is a dollar index. Dollar index is now trading below its 3 years low. So there are chances that we can outperform in upcoming time. We are not expecting index to make some very fancy target, but within that, within saying that, we can expect some some sector rotations, stock rotations might happen, and within that, we can create or we can make some good profit. So coming back to the level wise, 24,500 to 600 is a very good support. You can go long, keep a strict stop loss below 24,400, and again we can expect the monthly expiry towards 25,000 to 25,200 for sure. And once the market is sustaining about that, we can also expect 25,700. Now, within this rally, you can expect IT, FMCG, and auto to perform as per the technical analysis. And all this sector has formed a very good chart pattern at current market price also. So, auto we already discussed, FMCG we already discussed. In IT, which we two stocks which we are liking, both from again from frontliner only, Wipro and Infosys. At current market price, one can go long on Wipro. It has given a breakout from ascending triangle pattern. Similarly, you can go long on Infosys also. It has also given a breakout of rounding bottom pattern. So Wipro and Infosys from IT, we prefer to go long at even current market price.
Okay. Before we let you go, Mayuresh, could you help our viewers now understand? It's not the first time that we're seeing a geopolitical tension spike. We have seen what's happened with Ukraine, Russia in the past. We've also seen our own, India-Pakistan conflicts that took place just about a month and a half ago. And we have seen the repercussions and the markets, how they reacted, even though they were resilient and they came back. How should one really form their own strategies in these kinds of uncertain times?
So I think the Iran-Israel conflict, if this escalates and goes out of proportion, right, I think this will have repercussions in terms of how we view risk on assets. And therefore, I think if this escalates, again, I'm saying nobody really knows what's going to happen over the next few days and weeks. If this escalates and goes out of proportion, equities might stay under the pump globally. Again, I think if some resolution does come through, because this is not expected to be a long drawn process, even if it escalates, I think it's not going to be 3 months, 6 months down the line. I think whatever is going to happen is going to happen very, very quickly over the next few weeks, both in terms of retaliation, escalations, and then cooling the situation off to a certain extent as far as global negotiations are concerned. But till that periodicity of time, I think the risk of trade might actually continue. With this presumption and a base case scenario that is getting played out, if there is a drawdown or a correction in the Indian equity markets, my own sense is that because of our better macros and micros in terms of our placement, and markets really do not give, if you look at historically, and as you rightly pointed out, too much of weightage and emphasis in terms of events like wars that probably happen. They will give the knee-jerk reactions, they will probably consolidate, but then they will move ahead once the event is largely done. And therefore, I think earnings, global growth, global GDP, inflation, all that aspects come back into focus. And with that global perspective, India stands best placed as far as macros and micros are concerned. And therefore, the India story continues. If there is a drawdown as far as the Indian markets are concerned, a knee-jerk reaction is that. I think the allocations that I just said, BFSI largely immune. You're probably looking at consumption as a basket, largely immune, and specifically consumption, as I said, where supply chains are domestically driven, not globally, and where demand is completely domestically driven. I think those consumption stories would do exceptionally well. Hotels, selectively, largely immune to what is happening across the globe. Fertilizers, agrochemicals as a space where supply chains are well diversified in terms of input costs, are expected to be immune again because of better monsoon is expected to come through, reflecting in better numbers. Healthcare, hospitals as a space, largely immune again. No concerns globally on these spaces. And therefore, I think specific leadership stocks, as I've been time and again mentioning, can actually do well. So India, if it does dip in terms of the market performance, a good buying opportunity. Macros, micros, one of the best in the world.
Okay. Well, Mayuresh, always appreciate, and I will probably take this out chunk and chunk this out for all our viewers, because this will be the key question there for all retail investors. What next? Because they were just betting big on a recovery rally that could probably be faster than anticipated, and this comes as an uncertain overhang. But you've clearly explained to them what exactly should be one's strategy and how should one be really looking at the long term and look beyond the knee-jerk reaction as well, because India is not in the thick of action right there. This could be a buying opportunity in case there is this dip, because eventually things could become better. And right now we are hoping that the actions in Iran and Israel are calibrated and are contained as well. Many thanks, Mayuresh. Good to have you with us as always. Godspeed to you. We will see you soon, very soon in the next week as well, to probably in better times. And we will then again look at some more aspects of the markets.
Thanks, Sakshi. Always a pleasure, Nisha.
Thank you so much. All right, Kiran, first 15 minutes of the candle formed. What exactly is the takeaway right now, and any key stocks that have come afresh onto your radar?
So yes, as again we discussed in the morning that we are expecting market to recover and market is at that verge. And during this time, we would like to go on large cap side only. So Reliance, one can look at current market price. It's open with a gap down definitely, but there is a very good support of 1420, 1410. So one can go long on Reliance at current market price. Keep a stick stop loss below 1400, and again you can expect price target of 1440, 1450 in upcoming time. So Reliance look very much interesting at current market price. One more stock which we are liking, that is an SBI Bank. If you look at the SBI Bank, it is trading above its inverted head and shoulder pattern breakout. 200 days moving average support is also there, and after opening, we have seen a very smart recovery also. So at current market price, you can go long on SBI. Also keep a strict stop loss below 784, and you can expect price target of 810, 820 in upcoming time. So Reliance and SBI looks very good at current market price.
Reliance and SBI, in case you're looking at buying on dips, these are the two stocks that are looking good at this point. Let me just pull up some contributors in front of you, viewers. Only two stocks contributing on the positive side on the Nifty right now is ONGC and BL, just about 3.5 points each. The downside, HDFC Bank contributing 32 points on the declining side, Reliance contributing 30 points, ICICI Bank contributing about 20 points to the decline as well. Infosys and Kotak Mahindra Bank, L&T, these are the top contributors. But remember, this is a global-led impact that you're seeing on the market that started off yesterday with uncertainty on the US-China trade deal and the expiry rate moves. Today, it's more about the geopolitical tensions that have emerged in Israel and Iran, and that have led to a crude oil price spike, a risk of sentiment, gold prices spiking above 1 lakh rupee per 10 gram mark as far as the MCX gold is concerned. Dollar index, although is still low at this point in time, but a risk of sentiment that is clearly at play. Let's understand from you, Kiran, how would you look at the oil and gas story? Did you look at it last few days of a momentum upside? Did you take a position anywhere? How are you looking at it now?
So looking at the crude oil price, definitely we have identified inverted head and shoulder pattern somewhere around $64, and from $64 to it's back into the $73. If you remember, a couple of weeks back we discussed about the crude oil story that if you recollect in November month, in October month, from where Nifty started correction, the crude oil prices was $73. It recovered from $60 to 73, and here we see a correction on index also. From that level, again, during the April month, or I can say from May month, crude oil from $80, it started correcting and went to the $54. During that time, our Nifty also from 22,000, or I can say 21,700 to 25,500 or 25,200. Now you can again, this chronology is reversed. The crude oil price is going up and our equity is coming down. But during this time, we are not expecting equity to go below 24,400, 24,500. So at current market price, you can go long. Whatever the geopolitical tension is happening or domestic tension is happening, it may fizzle out or it may settle, I can say, very soon. So there are very rare chances that crude oil prices will sustain above 74, $75. If it is cool off, then definitely we can expect equity to recover. Now coming to the crude oil rally, definitely we can look for the refinery stocks like IOC or maybe BPCL. So both stock has formed a very much bullish pattern at current market price. If you look at the BPCL chart, it has formed rounding bottom pattern, sustaining above its 100 days and 200 days moving average. Today's gap down is definitely a very good level to enter in this particular stock with the strict stop loss of 300, and we can expect price target of 340, 350 in upcoming time. Similarly, if you look at the Indian Indian Oil Corporation IOC price chart, Here also you can see inverted head and shoulder pattern is panning out today. Market open below its 100 days moving average, but it is again sustaining and coming above that moving average. Stock price has a 200 days moving average of 142. Once that cross, you can expect some far better rally on IOC also. So both stocks look very much promising. You can go long.
Okay, got that. So we'll definitely keep an eye out on that aspect as well. Let's look at the markets. Remember, all the sectors are down in the red, viewers. We have oil and gas, consumer durable, real estate, private banks, PSU banks, financials, metals, IT, auto, all of them are actually reeling under pressure. With only the India VIX that's up and about now 10% higher at 15.4 odd levels. Even the broadest index, the Nifty 500 index, is down by 1.2%. So the market breadth is very, very weak at this point. The stocks that are holding up are the Jubilant Group stock, Jubilant Ingriva, Jubilant Pharmova. This is after the block deals have taken place, and you can actually see a reaction on the positive side here. Apart from Oil India and ONGC and Reliance that already, Kiran has marked out. MCX is also up in trade today. You're also looking at some defense names also come back. Let's discuss the defense names with you. Again, Kiran, this space got into momentum after the India-Pakistan conflict. And we did see a lot of order flows again coming back to this space. Today, again, the index of defense is up by 0.9%, defying gravity and bucking the trend at this point. HAL, BEL are up, data patterns. Some such stocks are also holding up in trade. In the times of geopolitical tensions, wars, defense, do you think will again give a promising space to look at?
See, within the defense, there are a few stocks which we are liking. There are two stocks like GRSC and one more stock is BDL. These both stocks look very much promising to us. Apart from that, other stocks are also probably good, but looking at the valuation and the technical chart setup, GRSC and BDL looks very much promising. If you look at the BDL, it has given a rounding bottom pattern breakout above 1800. Now it is again retesting is 1800, and today it is trading above 1900. In this correction or in this profit booking, definitely one can go long at current market price. Keep a strict stop loss below 1700, and we can expect price target of 2300 in upcoming time. Similarly, GRSC, if you look at the GRSC has also formed similar pattern. Now it retesting its previous bottom, and the previous bottom is somewhere around 2700. Today price is made a bottom of 2900. One can start investing into the GRSC. We can expect some price correction further, somewhere around 2700. But all this correction or all this profit booking is a very good level. You can go long, keep a strict stop loss below 2500, and we can expect price target of 36 in upcoming time.
Got that. So GRSC could be a big buying opportunity. Even on dips, you could probably look at buying at around 2700 odd levels is what Kiran believes at this point in time. A lot of stocks that have been in focus. Let me just reiterate for all our viewers the stocks in news today that we can take views from Kiran on today. Torrent Power, the wholly owned subsidiary Torrent Green Energy has secured a 300 megawatt wind power project from Solar Energy Corporation of India. That's in focus. You have DCM Shriram, the diversified agri-related firm that's announced its board has approved acquisition of 100% stake in Hindustan Specialty Chemicals for 375 crores. That's another stock that we are keeping a keen eye out on as well. Apart from this, we'll also focus on NTPC. The company has notified the exchanges that its Unit 3 600 megawatt of the Bud super thermal power project, stage 1, has successfully completed its trial run. So again, a positive there. So the power space is back in focus. Any suggestion within the power pack, Kiran, that you would have either on the renewable energy related stocks or on the frontline power space? Is this a space that's attracting your attention afresh?
See, looking at the power, it is getting again into the flavor. If you but we wanted to go with the frontline stock only, the renewable power or a solar kind of a theme, which is we don't know. It is again valuation point of view. We are not that much comfortable. But on power sector, large cap like in Adani Power and Tata Power, they are giving a fresh breakout at current market price. And looking at the previous rally, definitely one can look into this frontline stock only. So if you look at the Adani Power, stock price is trading above its 200 days moving average. It has formed ascending triangle pattern which is still intact. So one can go long at current market price at Adani Power. Keep a strict stop loss below 550 and you can expect price target of 600 very soon. One more power stock which we are liking, that is a Coal India. If you look at the Coal India price chart, the stock price is into the very much consolidation phase since last couple of months. If you look at the chart pattern from 2025, the stock price is into the very small narrow range like 370 to 400. But looking at overall chart pattern, stock prices continue making higher low only. And the stagnant resistance somewhere around 410 to 415. Once the stock price crosses that resistance, we can expect fair amount of rally on Coal India. So at current market price, you can go long on Coal India, keep a strict stop loss below 370 and expect price target of 420. Once the 420 cross out, we can expect far better targets. So Coal India, Tata Power and Adani Power are the preferred stock to go long.
Okay, got that. I hope this has also, helped all our viewers to really understand how to go about this space. Let's talk about the mid and small caps with you, Kiran. Any specific stocks in the mid and small caps or the broadest index that you're looking at, where investors can focus their attention now?
Looking at the Nifty mid cap and small cap indices, there where we can expect some sort of corrections continue or we expect let wait for the day or two, because look at the crude oil price rally, it is a 10%. If it is not cooling off down, then we can expect some price corrections maybe come down on mid cap and small cap, but on large cap front the stock prices are very much strong. So I would suggest at least for the day, let's wait for the recovery or let's wait for the prices to sustain above its support, and then from next week we can go long for mid cap stocks.
Okay, got that. I hope this has also helped our viewers understand how to go about this space as well. Meanwhile, we are also looking at some of the other stocks that are in focus. Asian Paints is something that I wanted to discuss with you, particularly. Of course, one aspect is that crude oil prices are spiking, and that could impact companies like Asian Paints because of the crude derivative and the raw material price that they really see. But yesterday there was this big block deal that pulled up the stock higher. A 7,700 crore rupees of a block deal. The stock was up about 2% odd. So far, Asian Paints has actually had a last 1 year of a disappointing run up as far as the stock prices are concerned, because the fundamentals were getting affected, earnings were coming in muted, competition has been rising. How would you look at Asian Paints, which has been for so many decades, a clear wealth creator for investors, a co-portfolio stock, but things are changing dynamically with big entrants coming in, contours of the how competition will be surging, and therefore your strategies have to be revised again, even though it is still retains its largest market share. But will it be impacted is what the question is, and that's why the stock price is not probably continuing to surge up. How are you looking at Asian Paints afresh?
So overall, Asian Paint, as you mentioned, there is a lot of competitors are entering into the market. There are very much big players are also coming into the market, and that's the only reason we can see since last couple of years. If I'm not wrong, since last 2 years, Asian Paint remain underperformer. Now you can see the price is taking very good support at 21, 2200, but every time it went up to the 24, 2500 and it's falling back. So overall, as you mentioned that whether they are changing their strategy, how the impacting on their financials and the PAT level. So we still required 2 or 3 quarters to look at how Asian Paint is performing. But looking at the previous history or looking at the past history, definitely Asian Paint looks very much lucrative at current market price. Whatever the crude oil rise and everything, it's a part of game only. But looking at overall chart pattern, one can expect one can expect Asian Paint to do better in upcoming 2 or 3 quarters. So at current market price, you can go long on crude oil at somewhere around 21, 2200 level. Keep a stop loss below 2000, and you can expect price target of 2500. Once 2500 cross, then we can expect far better rally towards 3000.
Okay, got that. So I hope this has given another fresh perspective to our viewers as far as Asian Paints is concerned. That's something that we'll be watching out for. Let us also pull up some of the other aspects in the markets. We look at the FMCG space. FMCG is always used as a safety net, as a hedge. when there is a risk of trade in the markets, when people are wanting to shift to safety. Do you think FMCG, which has been so far an underperforming sector in the markets, in these kind of times again, we could see some buying emerge across the board, even though right now the index is down, even ITC, HUL, Nestle, Marico, they're all down in trade right now. But are there any signs that FMCG could be looked at in these times for a hedge?
So if you look at last year, FMCG was underperformed and it has generated almost flat to negative return. And you look at the HUL or you look at the Nestle, they have given a negative return after 10 years or 15 years kind of a history. Now, why they are giving negative return? If you look at the financial or a macro level data, we don't find any kind of a cautious on particular that level. Now, this year, your tax limit is raised by the 12 lakhs. So now the spending power is increasing for the people, and the spending will go to the consumptions only, definitely. So when this decision has been made for the income tax, so now we are expecting consumption in a two different way. FMCG, auto, this two space where we can expect spending power will increase, and this both sector will definitely are tailwinds of this news. But to encash this news, we should wait for another 2 to 3 quarters. So definitely from December onwards or January onwards, we can see some good amount of rally should happen into the FMCG. So at current market price, we are expecting to go long on FMCG. We already suggested to our client Britannia, Nestle, Marico, even HUL, ITC. So these are the frontliner stock you can add into your portfolio. Wait for at least 2 to 3 quarters, and definitely we are expecting 15 to 20% kind of a rally in this particular stocks.
All right, Kiran, then we will thank you on that note for being with us on the show and helping our viewers out in devising their strategies in this uncertain time in the markets, helping them really spot where are the buying opportunities despite all the weakness that we are coming across in the markets. 24,600 right now, but we are down by about 285 odd points. Right in the morning trade, investors lost about 7 lakh crore rupees of wealth because of this dip that has happened. Let's see how things progress. But remember, as I began the show by saying it's Friday the 13th, in case you believe in it, then we'll keep our fingers crossed and hopes and prayers right in our hearts that things get back on track, things get sorted on the geopolitical front. And of course, we will be covering the Ahmedabad plane crash updates for you throughout the course of our day. And you will be hearing from top voices who are talking about what next must be done to prevent any such fatalities and whether it is in our hands or not throughout the course of our conversation with top experts. So stay tuned with us. Business Today Television will get you everything that you need to know about both markets as well as what's happening with the geopolitical front on the tensions on Iran, Israel, and the updates from the Ahmedabad London flight crisis.
Hello and a very warm welcome to Business Today Television. I am Chetan Bhutani. Maruti Suzuki's Swift has received the 5-star ratings from Bharat and Gap.